Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone had a good weekend and ready for this coming week. We have a really wild week coming up. So if you did not already check out the This Week in the Market uh, show last night, we go live every Sunday at 6 p.m. for a 30-minute show. We talked about the economic calendar, and it's a pretty quiet one until we get to Thursday, Friday, GDP and PCE, two major economic releases that are going to impact what we would expect for the FOMC target rate probabilities to shuffle around. I've also dove pretty deep into that topic in the current issue of This Week in the Market, which will be going out later on this morning to all the subscribers to that newsletter, as well as my Sector Secrets Mastery members. So we've got a lot going on, and I'm sitting here at the Estimize website. So for those of you that are not familiar with Estimize, this is a very cool site. It's my preference for tracking earnings, mainly because most other websites will let you know what's coming up tomorrow or this week, which is really for me a time frame, a time horizon that's way too short in terms of properly setting up stocks well in advance of earnings. So I like to, number one, I want to follow the stocks I want to follow, right? And that means focusing in on the high concentration weighted stocks in the indices and the sectors. That's step one. Step two is knowing when those earnings are coming out anywhere from 4 to 6 weeks before, right? That's that rally, that's ramp up. Some of the clearest action into earnings is definitely not the earnings release itself, which to me is not just the day of, it's the 24 to 48 hours before and 28 to 48 hours after that I really want to do my best to avoid. I wait till the dust settles. So at very least, it's basically a 3-day event before the day of and the day after, or a 5-day event 2 days before the day of and 2 days or 2 sessions after. And so when we're looking at earnings and we start thinking about our watch list for the week, we've got to think about earnings as, depending on the size of the stock, sort of a rock or a pebble or a boulder being dropped into a pond and all the ripples that go in all the different directions. The index direction, which ETFs, which other stocks are going to be impacted by that single stock having potentially an outsized price movement range, and the way in which high concentration weighting glues a lot of stocks together where they really can't move on their own. They're really attached to a greater whole. And that's very much what high concentration weighting is, and it's really important. So this is Estimize, Estimize. There's a free version of this, and there's a paid version. I've used both. I'm a big fan. And again, I want to follow the stocks I want to follow. Also, if you're looking for whisper numbers, this is the best site for whisper numbers as far as I'm concerned. So it's a site that I use quite a bit, especially during earnings season. All right, so then the other site that we're going to jump on into is Forex Factory. Forexfactory.com. Check out the economic calendar. What do we have coming up today? Really nothing. We have nothing. We have bank holidays going into the Tuesday session. That means as we wrap up the European, the UK, and the US session, when we go into the Asian session tonight, we're going to have no Sydney, no Auckland participation, mostly Tokyo, Singapore, Hong Kong. Is that a significantly less participated Asian session? Not really, when you consider the primary financial center for the Asian session is Tokyo. So still something to keep in mind, but things stay pretty quiet. Am I concerned about consumer confidence? Tuesday, that will clearly be a hot zone, but it's Thursday that things really start to heat up with advanced GDP. And then the Federal Reserve's favorite, I call it their pet inflation index, and that is the core PCE coming up. All right, so that's just a quick look at what we've got coming up this week in terms of hot zones. Earnings are a hot zone. Data is a hot zone. If we have a high impact, high volatility, high volume scheduled event, that is a hot zone. All right, so let's jump on over to our charts. I'm going to be working with the TradingView charts here. And let's go ahead and jump into the questions. Oh, by the way, before I neglect to mention, for those of you that are looking for, okay, Rog, what is this playing here? No, I don't need Yahoo Finance. Let's head on over to Simpler Trading. For those of you that are looking at a way, no offense to Yahoo Finance, I want to show you what we have coming up Thursday. So this Thursday, we have an event coming up, which is, we have a lot of live events now, don't we? We've got a live event coming up, which is how I go through my week in terms of, here we go, right there. Let me push this through the chat there. So it's my weekly trading plan, and I'm going to walk y'all through what it is that I do. Okay. What is it that goes into the analysis that I do in the Sector Secrets Mastery? What is it more specifically that goes into the analysis that I put into my compass, right? Which direction do I need to be pointed in, whether that be stock list, sector list, macro realities? What direction are we pointed in, right? As the old saying goes, if you're trying to catch a sunset and you're running east, you can run as fast as you want. And I think that ultimately a lot of traders are working very hard, but not necessarily in directions that are going to give them the best ROI, return on investment of time, return on investment of capital, right? How do we use our time more effectively? We're going to be doing that this Thursday, 4 p.m. All right, back on over to the Trading View charts. And first up, could I take a look at TLT, GLD on the 1 hour? Sure. Let's do that here. And I'm going to move this clock over. All right. So starting off with, so if I'm going to look at TLT, that's the long bond ETF. I'm going to look at the long bond futures, right? We're going to take a look at what's going on with the long bond on the future side first. So you mentioned the 1 hour. So here's the 1 hour. And again, build the trade from the bottom of the chart up. What's the underlying trend, right? What's the underlying trend? And it is still neutral. What's interesting about bonds is we've been rejected from the 200 propulsion on the 1 hour chart, most recently on Friday. That is going to be an obstacle to the upside. Doesn't mean that we can't move higher. We just have to be cognizant of that's where the resistance is. Otherwise, what I would say is there's two ways to look at this. And let me grab my drawing tools here. Every trade can be sort of put into one of two buckets. One is, are we looking for a breakout through resistance or rejection at resistance, right? So that's the first thing. I would look for rejection at resistance, which means the buy zone is going to be likely down in this area using the Darvis 2.0, automating the support zone. That's support right in here, right? Automating that zone for a potential buy. I wouldn't look for momentum in this environment. Momentum is going to work best in a trend. If you're ever wondering, okay, Rog, if I'm looking at any kind of momentum breakout, meaning strength through resistance or weakness through support, you're going to find the highest probability environment for that is a trend, right? So that's what I'm looking at on ZB. So Robert, that would then map to possibly TLT puts if I'm looking for the short side, or after the move lower, TLT calls. All right, GLD was the second question. That's going to be GC futures. GC futures on the 1 hour chart are in a downtrend. So this is far easier. Uptrend or downtrend, when I have clarity of the trend, now I have directional bias. Now I know exactly what I can't do. And let's think of it in what we can't do. Let's eliminate certain possibilities. I am not allowed to buy on the 1 hour chart of gold. That would map to GLD as well until the 1 hour goes to a neutral environment. For now, it's red, it's a short, and that means only either long puts or I got to be short the GC or GLD. So long puts or short the futures contract. And that's how that would map to GLD. All right. So that is the process there. All right. And yes, for those of you that are wondering, that site that I like so much, I try to find really cool resources on the internet for you all that I love. Estimize is the link. Okay, Gemini? All right, cool. Next up. Are we holding any special early sessions to trade any events this week? In Sector Secrets Mastery, I am thinking about GDP and PCE this Thursday, Friday. I might pick one of those. So for those of you wondering, Rog, do you always trade pre-market? And usually the answer is no. However, my pre-market window is 7 to 9 a.m. Eastern. If I'm going to trade a hot zone event, I am usually looking at the close of the prior session. So Trader Momo, if I'm going to trade pre-market Thursday, let's say the GDP, or pre-market Friday with the PCE, I am going to look at the way in which the Wednesday session and the Thursday session closed. I'll be keeping a really close eye on that. And then, of course, if we are going to have any bonus sessions in the room, I will, of course, alert that out. And just to give you an idea of what that schedule is, I mean, bonus sessions on top of an already very active coverage of the week. This is our basic week in, week out schedule, barring any bank holidays when the markets are closed. So you can see we've got a this is a very active room Monday through Friday during 9:30 to 4 o'clock Eastern hours. And typically I won't day trade non-farm payroll morning, options expiration morning, and quarterly expiration, but we still will get together. Sometimes I'll put a couple of aggressive trades on, but this is our schedule. Yeah, so if we add any pre-market sessions, we'll do that via announcement. All right. Okay, next up is, let's see. Thank you for everything. The French-speaking trading community hopes that you will republish a new version of my book on Forex with all the adaptations I talk about in videos. Well, thank you. The first translation of my first book, which seems a million years ago, was French, and I went over to France during the release of that publication. I spoke at the I can't remember the name of that. Not that I could probably even pronounce it if I could remember, but yeah, I guess I was there for three days. I was there when that book was released. I don't know what the plan is, my friend. I know there's no plans for any English or French translations coming up soon, but I hope that one thing I think we can do is closed caption a number of the YouTube videos, at least so it slows down. I know I can speak kind of quickly, but I don't have any plans yet. But you bring up very happy memories. When I was in Paris, I had a wonderful time with the traders out there. Very, very, very passionate group of traders out there in Paris. All right, next up is, oh yeah, by the way, that's a really ridiculous link. I know I sent that out. If you head on over to the Simpler Trading YouTube channel, you can find that Thursday live session that I'm going to do in terms of how I prepare each week. All right, so then thank you for that. All right, next up, Peter asks, when trading futures, is it certain that we can exit at the stop loss and not below if there's a sudden drop in the market? So Peter, the simple answer is no. Stop losses in futures and stocks don't have a limit type feature. In other words, a stop order, and I'm so glad you asked about order execution. I love the question. Stop orders are best described as market orders with a price trigger. Now, what's a market order? It's just the next best order. Get me in, get me out, right? A stop order turns basically into a market order after the price level that you've designated as the stop price is reached, typically the bid or last, however your broker does that. So what happens is you've got this stop order, this price based conditional order out there waiting and waiting and waiting, typically on your broker's platform. The price is reached, boom, it's now a market order. So because of that, no, there is no certainty around that. No, not at all, because a limit order is that order type that says, give me this price or nothing else. right? Stop orders do not have such contingencies. No, it is in fact really a market order that sits dormant until that stop price is hit. So thank you for the question. All right, next up is the SPY. Sure, let's jump on over there. So Gemini, much like the conversation about bonds and gold, SPY, and this would extend to SPX, by the way, begins with the conversation at the ES level. And so first I'll take a look at the S&P, and let's take a look at what we've got going on in the S&P. Again, I'm on the TradingView charts. Love these charts. So we're taking a look at what we've got here in terms of a range. Again, we have a number of fairly high impact earnings this week. So as much as I would love to scan the market for trends and scan the markets for certain types of criteria, the markets, the symbols that are going to move the broader averages, the market, so to speak, the indices, are going to be a number of individual stocks, especially when it comes to the Dow. There are a number of top 11 names weighted within the Dow that are going to be released this week. Meta, Google, Microsoft. We have a lot of high impact tech names that are going to be released this week. So most of what's going to happen, puppy, she's growling at the pool guy. Most of what's going to happen this week is really going to be predicated on earnings for volatility. But remember, and this is really something that we want to separate from macro reality. Macro reality is Thursday's GDP. Macro reality is Friday's PCE. And those are going to map directly to the target rate probabilities. In other words, what the heck are Jerome Powell and company going to do? That's far more important in terms of continuation to the upside or a more significant pullback in the S&P than really earnings. Earnings are going to be very concentrated, maybe 3 to 5 day impact events. Longer term, when you map out earnings, they're really not that important. They really aren't to the macro in terms of bigger picture trends. So we've got these volatility events, which quite frankly are irksome. Great for short-term traders. I love that. But for the bigger picture, we're going to stick with the macro. That said, that means there's two ways you can look at this. Either more of a day trading or 1 hour nimble get in, get out type approach around earnings, not through, but around earnings, or push it later to Thursday, Friday, go out to a daily time frame, and then set up the S&P futures based on those macro data releases, not stock earning data releases, and then see if the ES is going to move down into a support zone, a daily price movement range, etc. And then we can play a daily time frame. So it really depends on the time frame, right? It really depends on the time frame that you're interested in. Shorter term, be aware of the earnings that are just kind of dotted throughout the week. For longer term, daily, maybe even weekly, we want to focus on Thursday, Friday. All right. Last question before we wrap up. Dean asks, when trading pre-market, would I ever consider holding an open position into the open? Right. So if I get in, say somewhere between 7 and 9 a.m. Eastern, and here comes the bell, 9:30 bell, and the Wall Street Open, it really, Dean, if I'm already sitting on a decent cushion of preferably realized profit, meaning I've already scaled out once in that 2 hour window before the bell, and I now have a break even stop, it's a little bit easier. If I'm in an unrealized loss or an unrealized gain and I'm going into the earnings, I prefer not to be in that latter situation. So that's what I would say in terms of what I would do at 9:30 if I've already entered between 7 and say 9 a.m. Eastern. All right, gang, as always, thank you so much for joining me for Charts and Coffee, my Sector Secrets Mastery folks. I will see you in the room in just a moment. All right, gang, be good to each other. I'll see you tomorrow, same time, same station.